Good morning, everyone. This is Mortgage Pros 411. I'm Audrey Boissonou with my co-host Kevin Casey, and today we are joined by Bob Simpson. How are you, Bob?
Terrific. How are you?
You know
Welcome
that
to California, Bob.
horrific. I don't know which one.
Good,
Terrific.
good to be here.
Okay, well, first let's start with some good news. It's always nice when we're in the mortgage business and we have good news. We're in the green, people. The 10-year treasury last time I checked was down to 10.57, not 10, geez Louise, that would not be good news. 4.57, and that is a nice change of pace. We seem to be headed, at least temporarily, in the right direction. We do not have 8 million% tariffs that have been imposed in the last 2 days. That's also very promising. So we have high hopes that that will continue. And this week is pretty light when it comes to economic news. So we have existing home sales on Friday. I'll go backwards. Thursday, we have initial jobless claims. And Wednesday, that's tomorrow, believe it or not, mortgage applications in a 20-year bond auction. So far, so good. It felt like we started off this year with a big, humongous bang as far as jobs reports and all sorts of, it was crazy right from the get-go. So this week we're like, let's take a little breath and think about the fact that we are part of Crispin Media Group. So make sure you're checking out the different offerings that the Crispin Group is providing every week. So with all that being said, Bob, we brought you in here for a number of reasons. And Kevin and I really went back and forth, as we often do, about what we should title today. So these were some of our options. How to launder money like a mortgage pro. How does that sound to you? No?
It might go in a darker direction.
Yeah.
Payoff demands, money laundering, and you. So how on earth are payoff demands connected to money laundering and maybe us? So can you just start there, since that was our title that we settled on today?
Well, let's start with what underlies that question, which is we deal in a lot of money.
Yes.
And we throw around hundreds of thousands of dollars and even millions of dollars like no other industry. I mean, it's really amazing the amount of money that comes through our institutions and across our underwriting desk. So start there. Start with the fact that there's a lot of money that we touch. Now, when you touch a lot of money, there's always somebody that wants it. There's always somebody who's going to figure out a way to skim some of that
Get their
off.
hands on it.
Yep. I mean, so start from the fact that we are a target-rich environment. We handle a lot of cash, and we're familiar with some of the balder attempts like misdirected wires, telling you to wire your money here when it should go there. That's just the wolves at the door. They're out there trying to get you to give them your money. Well, what if they aren't misdirecting your wires, but what if they are a crooked company that is going to put in a demand for payment from escrow? Who's really getting your cash? Are you giving cash to people who shouldn't be getting money and thus having money in our financial systems? They're out there too. So that's what started this conversation about, okay, well, who's trying to launder money and what's our risk here?
Well, so the whole idea, when you said, oh, you have to check out, who is the recipient on your payoff demands, I'm like, what? I mean, it never would have even occurred to me. So let's talk about what they're doing on the back end as far as checks go, and who they're checking, and who we're supposed to be aware of. Like, what do we do as LOs? Because I'm like, I don't know how to
I usually don't get involved with that stuff.
going
That's
to.
usually escrow.
Okay, so let me lay the predicate for that and tell you why that subject came up when we were talking yesterday. It goes back to we hold a lot of money. And since 2012, all of the Bank Secrecy Act requirements have applied to mortgage lenders. We're bound by this for the last 12, 13 years. All right. So I want you to, for the purposes of today, stop thinking about all of the other regs that bind us, like TRID and HMDA and all the stuff that says be nice to borrowers, don't screw them over. Let's just not even talk about any of those rules for a second. Let's just talk about the interest that Treasury, FinCEN, that's Financial Crimes Enforcement Network, talk about their interest in preventing dirty money from getting into our legitimate financial system. Let me just shortcut a bunch of conversation here by saying that the terrorist attacks of 9/11 amped this up considerably. The Bank Secrecy Act went into place in 1970. Money laundering officially became illegal in 86. But with 2001 happening and the passage of the Patriot Act, bam, all of a sudden now we want to stop. And they refer to this in the same breath, anti-money laundering and countering the financing of terrorism. So we often don't think that we are touching those things at all. We don't imagine that that touches our life. And so as mortgage people, we're like, wait a minute, what money laundering? Why is this a part of my life? Just keep this division between these rules and the fair lending stuff. Okay, so let's keep them separate. Starting in 2001 and then 2012, these rules apply to us. And what they mean is for you mortgage lenders is that you have to have an active Bank Secrecy Act anti-money laundering program in your institution. You gotta have a BSA officer. You've got to do internal audits. You've got to train. You've got to put in place policies and procedures that would protect against bad guys getting your money. That's it. You got to be smart about it. So let me give a little broader perspective here. And I know I'm going on too long, but let me say that you aren't the only one covered. Gold dealers, art dealers, money service businesses, anybody who deals in a lot of cash is a covered institution and is bound by these Bank Secrecy Act rules. So that's why we're even having this conversation. It's not to be fair to the borrowers, it's to keep bad money out of the financial system. That's why you're governed by this. And so we started talking, Audrey, about the requirements to, we initially started talking about the beneficial ownership information reports and what a burden that is and why we have to do that. But I just want to for purposes of our conversation today, make sure that everybody knows we're talking about the protections needed to keep a bad guy's money out of our financial institutions, not to be fair to the borrowers. That's not what we're talking about.
Well, again, this all started, no, let's just back up. So unless you have been sleeping through your NMLS 8-hour continuing ed for the last, I don't even know how long.
My students don't.
Oh, please. So you would know about the Bank Secrecy Act and the AML, right? You have to cover it. We cover it every year in our NMLS classes. Kevin starts his with, let me teach you how to let me teach you how to launder money. I'm there cringing, going, no, we're not doing that. We're not doing that. Oh my God. He thinks he's
That's not exactly how I say it, but okay.
Bastards, close enough. Anyway, so.
But I do find that when I say we're going to talk about Bank Secrecy Act, everyone's going to go like this. Then when I say, well, we're going to learn how to commit fraud, everyone likes prouts up on the class.
It's worse the way he actually says it. Okay, so with that being said, you guys all know about BSL and Bank Secrecy Act, BSA. So, or you should. And if you
It's
don't,
the same class either way, by the way.
so with all that being said, this year we were also woken up by this idea that there was this new rule going into effect that said that everyone who had a corporation or an LLC or business had to register with FinCEN and let them know that you existed. I mean, granted, we're all registered through the states, presumably, but whatever. So then it was this back and forth lawsuits. It's on, it's off, it's on, it's off. That's what kind of started this whole thing. So Bob, just to be clear, as of today, January, whatever it is, 21st, I think, where are we? Is that OI rule?
What's the date? January 21st. Yes. Okay.
Okay.
Yes. And so anything we say here could be instantly dated. After our conversation yesterday, I went and looked December 23rd, a Fifth Circuit court in ruling, it ruled that the the stay was not good, that the beneficial ownership rule was in force and in play. 3 days later, on December 26th, another panel in the Fifth Circuit said, no go, it's still on hold. All right. So this could change by the time people watch this.
That's right.
So
Stand by. We'll keep you posted, but that is the latest as of today. So officially, you don't have to fill that form out. However, in the course of my conversation with Bob yesterday, there are so many other things, other moving pieces that impact us, believe it or not, as an LO and a broker in our businesses with regard to making sure that we are doing business with people who are not, as a Russian oligarch, for instance, on some watch list that we're going to end up in trouble about. So talk about that, Bob.
all right. So after talking with you yesterday, I started to think how to make this clear. What if we're trying to make compliance and BSA officers' lives a little easier, a little more secure? Let me give you something that is going to help you think through this issue. As a covered financial institution, and if you're doing mortgages, you are covered, you've got to have a customer due diligence program inside of your institution. You have one. This isn't a mystery to you. You're aware that you've got a CDD, a customer due diligence program. And so what? You're going to use Drive reports, LexisNexis. You're going to do something to make sure that you've got the identities of everybody that's involved in the transaction, and they have been bumped up against the OFAC list, what they call the SDN list, or specially designated nationals. Okay, so you are going to make sure that you're not doing business with anybody who is a really bad guy, right? And you know that that's your responsibility as the BSA officer to make sure that you have a customer due diligence program. Well, you should be a little frustrated if you find that you are dealing with a corporation that is hiding who the beneficial owners are. You can't really do that CDD job of yours, the customer due diligence job, if somebody's hiding. So the perspective for a BSA officer should be, hey, I want those. And FinCEN has said that those should be available to covered institutions while they do their customer due diligence. I think there's some question. I'm not plugged in to this debate on how much somebody can rely on what's filed. Okay, so that's an issue too. And I don't think FinCEN is in the business of auditing those BOI reports. I think they just collect them, right?
You
Oh, that's interesting.
did they?
Now, this customer due diligence thing, is this what started way back when, I want to say back 2008-ish, maybe before then, where we had to start getting Social Security cards every once in a while on somebody, one of our clients? It didn't happen every time, but every once in a while, I would get a request. I need to provide them with further ID, and can you get us a Social Security card?
I think the history of this coverage dates back to 2012, when mortgage lenders had to adopt a BSA program that other institutions like money service businesses, the pawn shops, they've had to have a BSA program, and all of a sudden in 2012 it was applied to mortgage lenders. So what that means is you have to know who you're doing business with, and so you get all that information, Kevin. You get that kind of verifying information. But then you have this beneficial ownership interest of who actually controls a company that you are working with. And you just don't want to find that you're doing business with somebody who's on that specially designated nationals list. Now that list, I downloaded, last time I downloaded the list was 6 months ago, and it was 2,200 pages, and it was just this laundry list of companies, countries, even ships that you can't take cargo from. I mean, it's this long list that you can't do business with, and you just don't want to do business with someone on that list. And they're not very forgiving, even when, if it's just sort of inadvertent, they're not very forgiving about you doing business with somebody on the SDN list. Let me give you an example to sort of put that in perspective. There was an institution that got fined $100,000 or more. When they had a policy internally that said, hey, if a name appears close to a name on the SDN list, we will do these things. So they were responsible corporate citizens. They established policies and procedures. If we got somebody that's close, we're going to do this. Well, there was a close name and they just didn't do anything. They didn't follow their own policies and procedures, and it cost them over $100,000. You just don't want to
Was the
blow
person
that.
actually on the list?
They
or
were
was
on
it
the
just-
list.
They were on the list.
list.
So not only was it not, it wasn't even a close name, it was an actual name. And
It was an actual name.
Yeah.
It was an actual name, and they did not follow their own protocols when the name appeared close. So the sanctions are embarrassing, and they are draconian. They're not very forgiving. They're not like, well, try and do better. It's a pretty much a black and white issue. So we go back to this beneficial ownership interest. It applies to our listeners here, to people watching this podcast who have anything to do with compliance or BSA compliance inside of a mortgage lender. It's part of your CDD. You're going to want to know who you're working with. So that's how it applies to you. Now, Audrey, you were raising the fact that there are people who really don't like reporting on themselves. It's like, oh, one more thing to do. I've got to, report this, or maybe they just don't want to report this. That's a separate issue. That's an entirely separate issue from the compliance and BSA compliance inside of a lender. That's like, yeah, we need to look. We need to know who owns this company.
But if the company hasn't reported who its ownership is, then can the bank not lend to them or work with them?
So let's talk about that. If you're running a shop and you come upon somebody that you can't identify for sure,
Yep.
you have a duty to verify who you're working with, and
Right.
you need policies and procedures. So how far out on that branch are you going to step? Oh, well, this one time we won't worry about it. That's a risk question.
Yeah, 'cause
And
you just gave us the one example, the one company that got caught lending to somebody that one time.
So the flip side of that, guys, is a couple months ago, I was doing an SBA loan and we open escrow, and escrow runs the naughty list report, presumably, and comes back and says that the bank that I was brokering to was on the list. And
Bank.
so okay, so the first thing you do is not blow up the whole transaction. You go to the bank and you say, hey, I just got an email saying that blah, blah, blah. And they said, that's impossible, but hang on. So anyway, we worked it out. It was a mistake. They were mistaken for some other institution, but it was really an interesting situation for me. I'd never had that happen before. And I thought, how can you be a bank and be on this list even? But you never know. So anyway, so we worked through it, but it does come up, and it is a weird situation. And because the first inclination was from the title company. They're like, well, you can't do business with them. I'm like, okay, well, let's make sure this is for real. And it wasn't. So anyway, so with all that being said, I thought that was really interesting. And the other thing I wanted to say was there are a lot of loan officers who probably never, ever have anything to do with Drive reports or Nexus, Lexus, or any of that on the back end. Some of them don't even know what's going on, but just everyone needs to be aware this is all happening on the back end of these loans. It's either happening in underwriting or some compliance.
I would say not even the back end, it's in the front end too.
What?
It's got to happen on the front side before the loan closes.
It does. It's not happening on the front end. I mean, as far as what a lot of the LOs see, it's not happening. I thought that, okay, Bob sent this to me and I thought it was really a great example of a little bit that will illustrate the point, which is we need to not ignore things. And if it seems like it could be a problem, don't ignore it. So he says, when I was 16 and looked like a middle schooler, I used a fake ID to buy beer. The woman at the counter saw a child in front of her with a sixer of light beer and said, "No chance." But the voice of the husband chimed in unseen from the walk-in cooler, shouting, "If he has the ID, he can buy it." She knew the ID was fake, but we closed our transaction under her frowning face and I left with my beer. Now FinCEN is insisting that we get good ideas on people who buy and sell real estate, and they aren't kidding. So you said starting in a year, 12/1/2025, when the buyer of a residential real estate is an entity or trust, a new rule applies. So let's talk about that, Bob. So what is happening next December that, as far as this ID process goes, because this goes beyond this drive report and all the other stuff that's happening right now, right? Like title's going to have more obligations than they did before. Yes?
Yeah, and you have to come at this from the perspective of law enforcement that has seen a lot of properties purchased by criminals
Yep.
in a lot of high-priced areas and now in a lot of other areas as well. So sometimes we in normal business stop thinking about, man, there's a whole entire criminal enterprises out there devoted to real estate and crime. A lot of properties in New York City, Manhattan, were purchased with anonymous shell companies, over 50% of them at one point. A bunch
50%.
of,
Wow.
yeah.
And they have the
Yeah.
strictest regulations of any state.
For mortgages, apparently not for title.
Yep,
Yeah.
and these are not finance purchases. These are just cash
pay
deals.
cash.
These are cash deals bought in the name of anonymous shell companies, and it's unavoidable that attracts the attention of law enforcement when you actually check who owns those properties. So as a result of the real bad guys having touched residential real estate and the authorities recognizing that residential real estate is becoming more and more popular as a method to launder money, we got to know who people are. And it used to be that these were in geographic targeting areas. There were a dozen or more of these areas that were targeted, but now this is going to apply to everybody so that you cannot purchase and hide behind a shell company.
So back to the BOI. It sounds like it's something that we should probably do regardless, right? Or we just wait.
It's not, yes, here would be, there are two different perspectives. You are the corporate owner, you own the LLC. Do you really have to do it? I did it for mine. It took 10 minutes, filed it online. It's not a big deal, right? I don't have shell owners. There's no Russian oligarch standing behind me wanting to hide their identity.
I've
No
had
Iranian ones either.
So, I recommend that people go ahead and file them. If you're running a shop and you have compliance or BSA officers who are trying to do the best they can do, they should insist that these are filed. You would want to know who is using your institution to originate loans, to receive funds from loan to purchase properties. So we're talking about two different, you have to keep a curtain between these two things. One is the mortgage company that's trying to make sure they don't get in trouble by doing business with bad people. The other side of that curtain, they can hear each other shout, but it's a different location, is the people that are inconvenienced by filing these BOIs that really don't want to, that are saying it's intrusive. Yeah, I get it. It is, and it does. But the people that are trying to prudently run an organization are going to want to insist that those are filed. I'd want to know why you wouldn't want to file it. Actually, it's pretty simple to do. You pique my curiosity. And suddenly you're saying, don't look behind this curtain. It's I want to look behind the curtain when you tell me not to.
Yeah, the argument I've heard is they don't want to know who their investors are behind the scenes. But
I mean, like some of the objections I've heard are from people that I trust as far as being decent humans and business people, but they are, and it almost reminds me of some of the political stuff where you're on one side or the other. So that's intrusive. I don't want the government to know my business. Like it's none of their business. And so I think, again, for us as LOs, we need to know who we're doing business with. And
Yeah.
this has been something every few months we do a show. We've had the FBI, we had a title officer who came on, and who talked extensively about some of the real estate fraud that's been going on, just so that we all have an awareness of what's happening out there, which is crazy. So it is there, to your point, there are a lot of people trying to dip their hands in everyone else's cookie jar, and it's not okay. So the more that we can be aware, we can help our clients be aware, the better off we all are. But again, and even a number of years ago, Kevin and I were putting together a conference, and we had somebody come and speak who had been convicted of mortgage fraud for using straw buyers years before. And he never met his borrowers. It was all done over the phone. He never saw a face, never connected a name with a person. And then he got some creepy feelings, stopped doing business with them. And then, like, what was it, Kevin? Like 3 or 4 or 5 years later,
5 years later, and I'm
like,
not doing any of it. That's
not
when that door, the
10
FBI came in knocking.
it was crazy. So he gets a phone call, and it says, we're the FBI and we'll be arresting you today at 3 p.m. And so you think that that's all behind you, but it's not. So again, as much as we can meet our borrowers, like I go to my signings, people think I'm crazy. They think that's a horrible waste of time. And they think I have been called all sorts of things for doing that. But guess what? I know my borrowers. And so it is important that we know our borrowers in the land of click, click, click. When we're so impressed with, oh, you're the top people on the Scotsman Guide. Okay, how many of those LOs know their borrowers? How many? Or was it a team just like cranking through paperwork as fast as possible? I hear it all the time, especially from people who are in management or owning companies. They're like, it's all data driven. Data, 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 data. Well, guess what? You can commit a lot of fraud if you're just going by data, because unless you know who you're working with, there's value in that. So I would just, again, make a plea for get to know your borrowers, do something more so that you're differentiating yourself from somebody who's pushing a button,
Most
matters.
transactions that our listeners are going to be involved with are legitimate. Everything's fine. You're really talking about 1 or 2 out of 100 that something is sketchy. You're reminding me, I had a loan application when I was a loan officer. It was Harborside in San Diego. And this guy wanted me to go sit with this woman as we talked about pulling cash out of her house. And this guy was super sketchy. And we showed up at this woman's house who was going to take cash out and give it to this guy for an investment. And as I sat there, he said, it's to buy an Ecuadorian shrimp boat. And I went, that is cocaine, buddy. You can call that a shrimp boat if you want to, but I know what you're doing here. And I just excused myself, and I wasn't doing that alone. But he was pushing her to take 100,000 out of this house, and this is what. And I just sat there going, no, you just entered the land of sketchy, and I'm out. So those things happen. They're strange and weird. They're not usual, but you do have to pay attention to the amount of money that flows through our hands and who might like to grab some of it to buy a Ecuadorian shrimp boat.
Yep.
They don't have shrimp in Ecuador, huh?
I heard a
Can you imagine?
guy, an owner of one of a big mortgage operation in the US, recently say that if you are having your client, if you're taking a loan application over the phone, like basically shame on you. That's a waste of time. And you cannot imagine, I don't do it all the time. Like if somebody's capable of doing their loan app on the online, that's fine. If I know them, that's great. But the information I get when talking through a 1003 is pretty incredible. I mean, it's those conversations. I was doing one recently, and we were talking about them buying an investment property, and they had this whole plan and they sketched it out. But what they hadn't mentioned, which didn't come up until I was in the middle of this long conversation, was he was eventually going to move into this thing, right? So I am originally thinking, okay, we're going to do probably non-QM because it's much less expensive in this particular situation. And when he said that, I went, whoa, whoa, whoa. Okay, thank God we had this talk, because he's going to sign something on those non-QM docs that says neither he or any of his family members will ever move in and owner occupy it or occupy it. And so again, knowing your borrowers, this is a good example. You're giving us great examples of why we should do it legally. But the things that we've done that are considered to be old school at this point, and we've been talking a lot about old school the last few weeks, because some of us are going back to it. It works really, really well, much better than a lot of this tech crap that is helpful to some extent, but then, you hit a wall and it doesn't take you any further. So, when you're building a relationship, it's really important to have those conversations. Just take the time to get to know people, to spend time. Yeah.
Let me just share something very briefly that is on topic, and that is that a closing attorney that I just had a meeting with in Savannah said he suspects the number one misrep is going to be occupancy. He thinks that's, and this from a closing attorney.
It's gonna be what?
Fourth, in the last couple of years. So like there are some years it's occupancy fraud, and it goes both ways. Talked about this, where it's fraud around, they're going to say they own or occupy it when they're not going to own or occupy it because they want a lower rate. But they are also seeing a lot of fraud around people who say that they're going to rent it out because they need the rental income to qualify, but they're not really going to. So we've seen a lot of, and then I think last year, and it depends, Fannie Freddie's are sometimes a little different, but I think it was income last year, which again, I don't know how you, I mean, unless I literally don't know how to bunk income. I don't. I know how people used to do it. I don't know how you get away with it these days,
So you
but
didn't have your blank rental agreements in your drawer there on the left-hand side, and then the blank W-2s in the old days?
No.
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 Yeah, people get very creative with all those docs.
Yeah. But still, like, okay, people, there are checks on the back end. They are checking all of this. So
Yep.
you get away with it in the short term. You're not going to get away with it in the long term, probably. And even if, I mean, do you really want to live your life like that? Looking over your shoulder, risking everything, it makes absolutely no sense to me. But
So Bob, we started talking about the new rule it's coming in effect in December for the trustees. So can you go more into that? What's going to be required? You said there was a new rule for starting December 1st for trusts. Did I misunderstand that?
it wasn't just trust, I don't think.
If we-
December 1st, 2025, there won't be any anonymous transactions when there's a trust or a corp involved. There has to be a disclosure of the beneficial owner, anybody who owns 25% or more, or as a controlling interest. So if you're the Don of the family, but you have 10%, but you're the one that's calling the shots, you have to be disclosed too. So that is coming. I've talked to real estate agents and some closing people who don't think it's going to be that big a deal. I hope it isn't. It's aiming for transparency in real estate deals.
Interesting. Now, when we were teaching our class this year, Audrey, we had a case where there was some kingpin that was funding all his quote unquote fiancés. I think he had 11 or 12 of them that he
But that's a lot.
yeah, that he was giving them gift monies to, and none of the transactions were connected, but somehow because no one was tracing who was giving gift money, and I don't know how they figured this all out actually, but that was how it was being done.
They're tracking gift donors now. I mean,
Okay, so let me give you one useful point on gifts. I was auditing a file, and I checked the drive report, and all the players were listed. Everybody had been bumped up against the OFAC list. Everybody had been checked, except the grantor of the gift, because probably that drive report gets ordered the very first thing, and maybe the grantor of the gift's identity wasn't known for a week or 2 or 3. So here we got a deal where the person most responsible most times for that suspicious money coming in would be the grantor of the gift. That person wasn't checked. So my recommendation to people would be, when you are attempting to verify everybody in your transaction is legitimate, don't forget the grantors of the gifts.
But also, if somebody comes back and is asking in your compliance department and they're asking questions about this, don't rip them apart. I mean, there's a reason that they're asking, because, and it's
Yeah.
legit. And Bob, you know, in the event that
Wait,
somebody,
wait, what, Audrey, when do you beat up the compliance department? I'm just curious, because I'm usually very thankful when compliance calls me, but you saying you beat them up when they call you?
suggesting people don't beat them up.
Okay.
Okay. So with all that being said, I've now forgotten what the hell I was going to say. And so that's good. Okay. So there was a situation where, that you pointed out to me, Bob. Oh, I know what I was going to say. So if somebody hasn't read your bio, I think it's important for them to know that you were a loan officer. You also were a licensed attorney. Yes.
Yes.
You run a company that does audits, so you are deep in the weeds on all of this. That's why you're an expert. So again, if they missed your bio and are wondering why the heck we're talking to you, that is it.
I am a ACAM certified anti-money laundering specialist, and my whole raison d'etre is to make BSA officers' lives easier. So give them a look at who's doing the jobs well and where people are falling down. So that's my aim, is to provide education. And then we have online education about anti-money laundering for BSA compliance.
That's right. So,
And so when you watch Ozarks on Netflix or wherever it's currently on, do you go crazy with, no, you can't possibly do that when they try?
Oh no, that show nails it pretty well. I would
You
say
think so?
Ozark. I would say Ozark is very good representation of money laundering. And I joked with Audrey yesterday, if I were going to launder money, I'd start a church. I'd just walk into my bank every Monday morning with bags of cash and say, I am the most inspiring pastor you've ever heard in your life. And I'd start a church, because no one looks sideways at money coming in from a religious
Church.
institution. So as a consequence, it gets special attention from law enforcement.
Yes, I was telling Audrey that I happen to know a priest that was busted for money laundering.
Really?
Yeah.
I told him he knows a lot of bad guys. You also mentioned that art dealers, money exchanges, like where you change dollars for chronos or whatever you're doing. Cash businesses, any cash businesses are all things that we kind of have to, not kind of, that we have to be on the lookout for. So, and you had pointed out this very interesting situation, which again, I cannot believe how dumb this guy was. So he's the president of a mortgage company that was doing huge business. Like they had 180 billion in servicing or something like that with Fannie. So he is now serving a huge amount of time in a federal penitentiary, and he's not young. This guy was, I think, 71 when he was convicted. He basically took, I mean, he was taking money from payoffs and directing it to the wrong, to himself. He was taking escrows, people's taxes and insurance money, and using that. He funded a son's house. He funded a vacation house in Colorado. And now he owes more than $52 million in restitution. So, I mean, I don't know why this
How's
guy,
he gonna do that while he's in jail?
the whole thing just baffles me. Like, at what point does that seem like a good freaking idea? I don't get it.
He just got he got a sentence of 104 months at age 71.
Yeah.
And he just got hit with another 31 million on top of the 51 million before. So he owes 82.
And
It's
what's his net
really
worth?
it's really a tragic end to a guy's really very successful career. And instead of firing people, shutting down, changing his life, doing something, he just decided to cheat, and pretty ham-handed, got caught with it, funded loans and didn't pay them off, like refis, like gave the people their new loan, but then kept the cash.
I don't even know how you even do that.
And I called a client. I closed 3 loans last week and I called them yesterday. I said, okay, it's been a few days. Make sure that you call your previous or go online, log in, make sure your loan is zeroed out. Just make sure. I said 99.9999% of the time the wire gets there, but just make sure. So I tell my clients to do that at the very end just to make sure. And not because I think there's anything nefarious going on, but because
That is a great phone call to make, actually.
astray, right? What did you say, Kevin?
I'd say that's a great phone call to make, because I've had it where the lenders haven't recorded the payoff demand or the payoff, or they haven't closed out the account. Yeah, no, it can get pretty nasty sometimes.
It's super easy to fix if it's right away.
Yes. Yeah, the problem is if you do it after the bank goes out of business, it's really difficult to fix.
Exactly. So again, another way to be valuable to your borrowers, another way to stay in touch with them, another way to touch them, and they like it. They feel good. They feel comforted. Do you have any other questions? Was there anything else? So, and by the way, you know, your impound money, just don't forget to, I said, one of them, I said, text me when you get your impound money refund so that I can stop thinking about it. And then if you don't get it for some reason, just let me know and I'll help you track it down. Like, just be hands-on, help your borrowers. It's a good thing. And we have a comment here from Jenny who says, I can't believe people think that going to a signing is weird. She goes and it is so much fun. I have so much fun at signings. I do. When I'm sitting with your clients, and there is literally, I've talked about this before, there's a chemical thing that happens when you're in person, not just on Zoom even. And so it is, the more you can do that kind of thing, the better off you are. And yeah, it is really a good thing.
It's the best part of the job.
I think so. I love it. I mean, I went, oh my gosh, one night, actually it was last week. So I had this private money deal that was needed to close on Friday, and we needed to have, you know, something signed on Monday so that we had, you know, the time periods, right? So they send it to the borrower, but the wife didn't get it to e-sign it. They're a little older. And so I drove to their house at, well, actually it ended up being 9:30 p.m. because I found out later he had an online poker game that he does every week that he could not miss, which, okay. But we had a great time. I mean, we talked and this was a couple that they were uncomfortable with the idea of a bridge loan and paying higher interest rates, etc. But boy, by the time I got a review today that was just fantastic. And so for them to go from, this is terrible, we don't want to do this, we'll try everything else, to, oh my God, you're the best. That's because I did all those things in person, or, you know, anyway, so I would just really encourage you to take the time with your borrowers. And again, if you do these kinds of things, it is much less likely you're going to end up accidentally doing business with a Russian oligarch. Okay, so again, we are, I just want to take a moment and talk about the fires in LA, because it's not just fires in LA, it's victims of these natural disasters that
North Carolina, all those, yeah.
what they're running into. So first of all, there are, and I'm not going to say the names because apparently some companies say that they don't offer these discounts because they don't want to get sued for, you know, by someone who didn't get a discount for some reason, whatever. There are some title companies that are offering discounts to people who have had disasters. So that exists. So just know that if your borrower is doing a transaction. And there are also, I think it's FHA it's the H program. They have a disaster
I thought
specific.
it was A.
What?
I thought it was 203A.
It's H. I think
H, okay. You
anyway,
might be right.
bottom line is there are programs that will help people who are the victims of disasters. There are lists of
And they'll let them build somewhere else other than just their lot, right?
okay,
Or
so
did I stop you from what you were about to say?
I was reading this list of resources. There are things like if you like Lyft and Uber were offering some free rides based, you know, like investigate it, because I don't know if how long they last, etc. You have to have some code. But there are a lot of resources out there for people who need help. And so help direct them to those resources or be a resource for them. And again, it is okay. So Kevin was telling me
several stories, yeah. I had
Awesome.
one this weekend where someone who had fires, a home burnt down in the fires in 2000, so 5 years ago, in Santa Rosa, and went through all the steps and had a contractor who was her son-in-law. And funds got dispersed to him to begin construction, and he took the funds and left. $150,000 that were supposed to be towards beginning of construction. So she was a victim of, who she thought was, someone totally trustworthy, her son-in-law. But he decided he wanted the $150,000 more than he wanted the wife and family and the other stuff, and he took the 150, went off to.
Did you say he was a, you don't need to give all those details, but did you say he was a contractor?
He was a contractor. Yeah.
Sure. Okay,
Crazy.
now,
Yeah.
fast. So now, so she's been making the payments on this bare lot.
Oh, yeah. So she's been making the mortgage payments on a house that doesn't exist for the last 5 years. And now she's getting a notice from the bank they're going to foreclose because there's no collateral behind their loan. And so now she has to fight that foreclosure. So it can get really crazy. It's, you think it's, oh my God, the house burnt down. That's the worst possible thing that can happen. Oh no, it can get worse. I had another friend whose house was burnt down in the Berryessa fires, and the whole block, gone. And the neighbor next door wanted to make a couple changes to the house. This is where you get into trouble too. This is actually where I was helping this one woman, is they want to make, she, particularly when I was working, she had a 3-1 home and she wanted a 2-2 because now she's older, doesn't need 3 bedrooms. So she would rather have 2 bathrooms when she has a guest staying over. And the lender said, no, you can't do that. You have to rebuild like for like a 3-1. You have to have a new 3-1 in its place. And they're all about keeping them within the space structure, can add to the foundation, that stuff. So so that's that one. The other one was the neighbor next door wanted to make a minor change, and the inspector just got like high and mighty about it and literally shut the whole project down on the guy and would not allow him to go forward with rebuilding his house. And then when my friend went to do something, the inspector had said that you have to have in the designs or the plan that, I think it was the water heater had to be elevated so many inches off the ground, and apparently they had only they were off by an inch or 2 or something like that. And and now they haven't put a water heater on at all. It's just the stand was there, and he goes, no, that stand isn't sufficient. You need the correct height. Well, they're like, okay, we're going to fix it. Well, the next step was, okay, now we need to do this stage. And he goes, oh, you can't do that stage until you fix the stand for the water heater. And like, we can fix the stand for the water heater right before we put a water heater on it. We don't need to fix that now. We need to fix this now. And he goes, well, if you don't get the water heater done by next week, or stand by next week, you'll end up like your next door neighbor where your project's going to be put on permanent hold. He was fortunate that he documented that conversation and went to the guy's supervisor and was able to get that particular inspector kicked off the job. So that was very beneficial to him. But yeah, you can be, I was telling Audrey, my brother had same problems when he was building a house, an inspector, and there's this one person, I won't mention who they were or anything about them, but he quickly learned that if that one person showed up on his door to knock to do the inspection, he would not answer the door. And that's how he got around it. And he would just call for another inspection. And if someone else showed up, then they would let them do the inspection. But this one inspector would go and look at, they're supposed to look at electrical, and then they would go look at plumbing and start writing them up on plumbing. He goes, we're not here. We're not finished with the plumbing. Don't be writing me up on plumbing when you're not finished. You're here to do an electrical inspection. So inspectors can be a problem.
The point is, these guys who are homeless at this point, victims of this horrific situation where they've lost everything, they're going to have some big challenges. So be resources for them. We had somebody post in the chat some resources. I will send them to Jason, who does our YouTube channel, and have him embed them in the YouTube channel so you can find them, or if you need them, I can email them to you if you email me. So anyway, bottom line is these guys are up against some monumental challenges coming up. They don't even know what's coming. So again, inspectors who are making things harder than they need to be, contractors who can't be trusted, make sure they're really vetting the people they're working with, and they're going to feel desperate, right? So if they have somebody who knocks on their door and says, hey, I can do this right now, they're going to be inclined to go with them. And so really, really let people know what to be aware of, and try and help them through this god awful process. Because again, the sheer numbers are just, I don't even know. I can't even process it. So it's going to be something else. Make sure that you're doing all you can to help.
Yep.
Yeah.
And I'd be curious with Los Angeles. I'm wondering how much it affects even travel. Like if you wanted to go down to LA for, all the people held up in hotels and such, are all the hotel rooms fully booked now? So you can't, as a tourist, can't even get down there.
Yeah. I don't know. I don't know. But
Because
I mean,
a lot of times we talk about this, how people end up camping out at some hotels for like, a couple of years sometimes while they're
yeah.
going through this process.
Yeah, that was somebody that I knew in the after the Oakland Hills fire, and they stayed at the Lafayette Park Hotel for 2 years with a family, which by the way, that's and so it was, yeah, it's a lot, guys. And so again, these are opportunities. And I saw a lot of people posting like they thought it was going to be insensitive if they were offering advice or help. And I'm like, okay, I don't really get that. So apparently there are things, and I talked about it a couple weeks ago or a week ago, where I had a client who lost everything in a Santa Cruz fire, and they were saying, don't offer specific things, don't tell people how they feel, don't, there are some don'ts, but definitely, help, what can I do to help? I'm here if you need me. There are discounts for title insurance, for instance, or something like that. So I think those are going to be useful. And again, depending on who you know and who you encounter who's been affected, yeah, figure it out. So anyway, we also had another comment in here that this is a good time of year to offer people a copy of their closing statement from last year so they can get their taxes done. So your borrowers who closed escrow in 2024, hopefully you had some, and they may be able to use that. Just again, these are things that we always used to do, and it's time to go back to it, right? So anyway, what else, Bob? What else is on your mind?
Well, my thoughts are with those people in those various areas of Los Angeles. I had the feeling I was watching Lahaina.
Yeah.
It's just those are gems,
Yep.
and the loss is just incalculable. So anything we can do to assist, we would do. But it's a Lahaina-esque loss. It's a beautiful little part of the country.
Well, right. I think, sometimes people think LA and they have a certain idea in their head, but there are these really cute bungalows and these really charming buildings. And I mean, just gorgeous, gorgeous. You cannot read. It is like Lahaina. Like I haven't been in Lahaina since the fire. I can't even imagine, because it's that old historic.
But another thing that's coming up now with homes, especially the ones that were up in Malibu, a lot of the people were running like Airbnb and such out of those properties. And now they've lost that income, and a lot of people don't have loss of income coverage on their home because they wouldn't even think to ask for that. But if you are using, Airbnb to supplement your income, and suddenly you lose the house, you lose that Airbnb income, that could be a problem for you, because you still have to make your mortgage payment. As we had the case with the client, I had, she's been making her mortgage payment even though there's no house. So you got to keep making that payment. So
The other thing too is check in with your borrowers and make freaking sure they have insurance. because that's another huge problem, is the people who, for whatever reason, whether they let it lapse or they had it canceled, they felt like they couldn't afford to put new insurance in place. That is not an expense that you can forego. You must have some sort of coverage. And again, this happened in various fires where, especially people who own their property free and clear, they think, oh, it's fine. It's not fine. So now they own a piece of land that is, that has no building on it, but they still owe a mortgage in a lot of these cases, and it's a disaster. So just really, 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 just reach out to your borrowers, make sure they're touching base with their insurance. If they somehow don't have insurance, help them. Just point them to a broker who can help them. Again, do more. Even though you're not getting paid for this, it's part of what I think we should be doing to take care of people. So with all that being said, it is it's a lot to deal with. And again, the number of natural disasters all over the country are it's astounding, whether you're talking about Hawaii or Florida or North Carolina, or like it just goes on and on and on. And so, and pray for rain. Like seriously, I was joking around, sort of.
Need it bad in California.
It's even in Northern California, we have a lot of rain, like in the fall, in the late fall, but we've had none recently. We all need rain. It's really so important. So again, that's not exactly it's also going to be, I think, really interesting to see what happens with the regulators in the coming weeks and months with our new administration. So
You see the new rule about lenders have to cut all the costs or potential, all the regulators that Trump said that they need to cut the building expenses and such. And I'm wondering if that's going to apply to the LLPAs. What do you think?
Yeah, in my dream. So it'll be interesting because the nominees for, like, the nominee for FHFA is a Pulte, which is a very, okay, let's just,
Homes.
then he's got, like more money than any of us could ever hope to. And then, but apparently he's very philanthropic. So I don't know. I can't make a judgment about him, but we'll see how that goes with FHFA. I mean, if you remember, it was when President Trump was in office last that they hit us with the 50 basis point hit for every it was anyway. So we'll see. The CFPB, I have no idea who will be in charge of that, but it doesn't mean that they're going to go away. But then we have this office of, it's DOGE, DOGE. It's which I don't know if I'm saying it correctly or not, but basically the Department of Government Efficiency. And that is the department that Elon Musk, and I heard somewhere that Vivek has apparently bailed out, but they were looking for people. I read this in Brian Levy's Mortgage Musings. He's the attorney that we've had on a couple of times, who is the compliance attorney, and he's interesting. But basically, the call for people to run this department or to work for this department, they wanted people who had extremely high IQs and wanted to work 80 hours a week and not get paid. And so, like, the whole idea of that was it anyway. I can't wait to see.
Audrey, you could do that.
That is true. There are times I work 8 hours a week and don't get paid. As a matter of fact, we did that all through lockdown, didn't we? Anyway, okay, that is neither here nor there. With all that, we are looking forward to seeing you all next week. Okay. So somebody said Vivek quit because he's running for a government position, mayor or governor or something. Okay. So thank you for clearing that up. We are very grateful to you, Bob. Thank you for keeping us on track with all of the transparency and BOI and BSI and BLI and ASP and RESPECT and all the acronyms that you are so focused on and such an expert in. So thank you. We really appreciate it.
Happy to help.
All right. Well, have a wonderful week, everyone. There are loans out there. Go get them and fund them. Okay. Okay. Have a great week. Bye.
Good,
Yeah.
everybody.
Thanks, Bob.